In this video, we are going to talk about real estate investment, making money in property. So before starting this video, please like this video and subscribe to our channel for future updates. Whether you're curious about the investment potential of real estate or you're simply sick of infomercials promising little-known ways to profit from your property, it's worth learning, for real, how real estate creates wealth. Rather than providing obscure strategies for investing in real estate or a primer on homeownership for first-time buyers, this article will focus on how to make money through real estate. It will cover both the basic methods that haven't changed in centuries, no matter what kind of gloss the gurus of the moment try to put on them, and specific opportunities that have arisen relatively recently. The most common way to make money in real estate is through appreciation, an increase in the property's value that is realized when you sell. Location, development, and improvements are the primary ways that residential and commercial real estate can appreciate in value. You can also make money in the form of income from rents for both residential and commercial properties, and companies may pay you royalties on raw land. Real estate investment trusts, mortgage-backed securities, mortgage investment corporations, and real estate investment groups are investment alternatives within the real estate sector. Making money in real estate can depend on many factors. Market conditions that affect remodeling costs, housing prices, interest rates, rental rates, and tenant availability. Number 1. Wholesaling. Wholesale real estate refers to a short-term business strategy that investors can use to make quick and steady income in the real estate market. A real estate wholesaler serves as a middleman between motivated home sellers and real estate investors. A wholesaler finds cheap property investment opportunities. If you've ever seen those "We buy ugly houses" signs, those are typically put there by wholesalers. The wholesaler will enter into a contract to buy the property, but then find a real estate investor who is willing to pay a bit more, the difference being the wholesaler's profit margin. Unlike many other forms of real estate investing, wholesaling can be a very time-consuming job, and there are lots of rules and other things to know. Number 2. Rent out your property. One of the best ways of making money in real estate is to rent out your property. Some investors in Pakistan build a home for the purpose of renting it out later. It generates a steady stream of income, and the investor can benefit from a rented property for a lifetime. Make sure to buy the property in a neighborhood which is popular and well-liked by the residents to generate a good revenue from your property. If you are building a home from scratch for the purpose of renting it out later, then take a look at these trendy features that will set your home apart from the rest. Number 3. Vacation rentals. One of the best tips and tricks for making money in property is to use your furnished house or apartment for vacation rentals. A vacation rental is an alternative to a hotel stay. When tourists or families want to visit Murray, they can either choose to stay in hotels or rent an apartment or a condominium for the number of days they plan to stay. Those travelers who like to spend some time away from the bustling city life book furnished apartments for a month. This is where you can generate a steady stream of income. Number 3. Renting out an office space. This is a highly underrated way of making quick money in real estate. Real estate investors are increasingly turning towards buying a commercial space and then renting it out. You can rent out the entire office or, if you like, provide a facility to cash-strapped entrepreneurs or freelancers who are looking for an office space but don't really have the money to buy or rent an entire office. In such cases, creating a co-working space is always a good option. Shared office space is not only beneficial to real estate investors, but also to budding entrepreneurs. Renting out meeting areas and conference rooms is common, but renting out desks is also gaining popularity with time. Property owners have started renting out desks to those looking to share the mutual benefits of working in a shared space. To make an informed decision, make sure to check out our detailed blog on the pros and cons of shared office space. Number 4. Investing in commercial real estate. One of the greatest opportunities in real estate is to invest in commercial real estate. Focus not only on flipping properties, but also on developing them. This way, you can earn revenue by upgrading the property and then selling it to gain profit. You can also purchase a commercial property and make a shopping plaza or rent it out for an office. When most people think of buying commercial property, they naturally think of multifamily apartment buildings or office space. While these are two of the most popular forms of commercial property to invest in, they are not the only assets to consider. Indeed, the commercial real estate sector is much broader than that. Commercial property also includes retail centers, warehouses, industrial properties, mixed-use buildings, hotels, land deals, and more. Whatever you end up choosing, make sure you weigh all the pros and cons of buying commercial property. Number 5. Using private lending. Hard money lenders loan money to those utilizing the fix and flip strategy. They may lend money to those buying a property to renovate and then rent out. The property investor, in this case, would secure a traditional mortgage after they have an attractive property bank that will now consider as collateral. Acting as a bank to property buyers yields a higher rate of return than you'd see if you left money sitting in the bank. You've had to do your due diligence, since mistakes could mean you don't have a valid line against the property. For those not yet ready to invest a large sum into a single project, crowdfunding is an option. You can loan money to someone who wants to buy a rental property or secure a down payment on their own home. In either case, the loans are high risk and illiquid. Another issue is that hard money lending of more than modest means that SEC rules apply. If you don't meet the income and net worth requirements set by the SEC, you may not be allowed to loan money to real estate investors unless it is in token amounts through a crowdsourcing site. Number 6. Through real estate appreciation. When the value of a property increases, we call this appreciation. While appreciation is not always guaranteed, but historically real estate prices have appreciated over the long term. So again, appreciation alone is not likely going to make you a millionaire, but real estate has always increased in the US, averaging 3% per year over the past century. For example, if you purchased a property for $250,000 2 years ago, and today that property is worth $350,000, the appreciation made you $100,000 richer, or in other words, your assets grew by $100,000. Another type of appreciation that can come into play is known as forced appreciation, the concept of increasing the value by physically upgrading the property through renovation. Any form of appreciation makes you money in real estate and you become richer. Number 7. Real estate investment trusts. A real estate investment trust, or REIT, is a special type of company designed to invest in real estate assets. Think of a real estate investment trust as sort of a mutual fund for real estate investment. Investors' money is pooled to buy a portfolio of commercial properties or other real estate assets. Many real estate investment trusts are traded on the stock market and are very easy to buy and sell, making them excellent choices for beginner investors and those with limited capital to invest. And many pay consistent dividends, making them good options for investors who want steady income. There are real estate investment trusts specializing in just about any type of real estate you can think of, as well as exchange-traded funds and mutual funds that will allow you to invest in a diverse portfolio of real estate investment trusts. You can learn more about real estate investment trusts investing with our guide to the basics of investing in real estate investment trusts. So this is our today's video. If you like our video, don't forget to subscribe to my channel or hit the bell icon. We will meet again with another interesting topic. Till then, stay safe and stay happy.